If it was anybody else, I would have said, looking at the smile on your face, it reflects that your portfolio is outperforming.
It's always
but with you, you're always smiling, even through the bottom of our underperformance. So I can't say that. But while I know we don't want to discuss short-term performance, let's get that out of the way. Can we start with what's happened since the bottom of the market on 30th March when since then, the Indian market has recovered, global markets have recovered, but your portfolio has been on a tear. We've had almost, 7-8% of outperformance. Do you read anything beyond this? I know it's too short term, but is there a regime change in the market, or has there been something more fundamental that's changed in your portfolio company's performance? How are you looking at it?
Thanks for pointing out that this is short term, because we shouldn't count it as a trend or a pattern in any way until it is at least say 6 or 12 months or longer. So far, it's been it actually turned around even a little prior to the end of the financial year. So the month of February was when we saw some winds of change, if you were to call it. Till Jan end, there was an 8, 9, 10 months of consistent underperformance, and February we saw some 300 bips of outperformance, followed by, as you're rightly saying, from 1st of April another 7. I think there are two broad contributing factors. One, certainly the external environment has to contribute, but the external environment can be very volatile in the short term. So if in the last 3-4 months, whatever has happened to the portfolio's performance here is only the external environment, then we'll need to wait for another 3 to 6 months at least to establish that this is a trend. Having said that, there are several changes that we made in our portfolio construction approach over the last 2 or 3 years. It had started to show some effect couple of years ago, but then there was a lot of, I would say, 2 or 3 sectors where we have zero exposure driving the entire market up in financial year FY26, etc. So there were lots of those external factors. Some of them might be changing. So net, I would say, sectoral orientation vis-a-vis where we are exposed, which is a little more external for the market because we're talking about relative performance. And secondly, a lot of portfolio construction oriented changes that we've made. Having said that, let me also burst the bubble of excitement by saying that we are, in absolute return terms, we are nowhere close to where I would like it to be. Our target is to deliver mid-teens or higher net of fees and expenses, and since inception we are hardly 11-12%. We are also nowhere close to where I would like it to be, like it to be on the relative performance side. Yes, we are starting to catch up on the 1-year time period, and since inception is also quite close to the benchmark. But 3-year, 5-year, we've given a lot of weak relative return or underperformance to our clients over those time periods. So, as they say, Dilli abhi dur hai. We are nowhere close to a zone of comfort. But having said that, I would like to believe that this is the start of maybe both due to our efforts as well as the leadership of the market changing. This could be the start of quality as a style, and within that CCP's decision making, which is more internal. To start delivering.